Hello and welcome everybody to Gold Asset of the Day for the 30th of April, presented by myself, Phil Carr, at the Gold and Silver Club. And of course, we'll be reviewing gold for the week ahead. We'll go through our forecasts and really what you need to know for this week. So first of all, let's just reflect on what happened last week. So for those of you who watched last week's report, if you haven't done so already, do go back and watch that report. We discussed the potential for gold at the beginning of the week to see a little bit of weakness, breaking down to that 1265 zone before then projecting gold to then rebound back towards 1280 to 1290. And in fact, that it is exactly what we saw towards the end of last week. So we did see gold find support at 1265. It rebounded higher, and then we resulted in seeing gold push all the way up to 1,288 US dollars per ounce on Friday, in line with that normal 200-point range that we typically tend to see for gold week to week. So really, what do you need to know about this week? So first of all, on Wednesday, we have the FOMC statement. This will be a major driver for gold and also the US dollar. Not only that, on Wednesday, you also have Japan on holiday, you have majority of Europe on holiday as well for Labor Day, and you also have China on holiday too. So this is likely to really create some high impact moves in the market, potentially on or after the FOMC statement, which is at 7 o'clock London time on Wednesday. Then on Friday, we have non-farm payrolls. So again, you want to keep an eye out for the potential for some really explosive moves on commodities later on in the week. So let's just have a look at the price action and what we're seeing at the moment, and really what to anticipate as we continue to go through this week. So at the moment on Tuesday, gold is trading at 1,284 US dollars per ounce. What you want to watch out for this week is that hedge funds and money managers, they have increased their net sell short positions. So what that does suggest is on rallies, if we do see gold potentially making a move back towards that 1290 to 1295 zone, especially if we see that in the lead up to the FOMC statement, which is often the case, that gold does tend to rally ahead of FOMC statements. If you go back to the minutes earlier on this month, we saw gold catch a bid and continue to rally up to $1,310. Before then, we saw that dollar strength come back into the market on Thursday and cause a correction all the way back down to $1,265 eventually, after hitting 1310 on the previous minutes of the FOMC. So with that in mind, this week with the FOMC statement on Wednesday, what we would look out for is the potential for gold here to continue to rally, to make a move. It's at 1285 at the moment. If we do see a breach back above last week's highs, which result around the 1290 level, if we do see a break above those levels, I would then look for a move up to approximately the 1295 zone. Now that could be perfect timing if we see that around the FOMC statement. If we see gold catch a bid and continue to rally in the lead up to the FOMC statement, and then on Thursday, if we then see the dollar strength come back into the market, we know hedge funds and money managers, they continue to sell into rallies, we might then lend into a bear flag price structure. So if you have a look at gold again here, I'll just make that a little bit more clear. On the daily chart at the moment, we're building up a rally. We've actually come back up to the midpoint here of the Bollinger's as well, but we're building up some upside momentum in line with what you would normally expect for an FOMC statement. So gold throughout 2019 has continued to rally each time we've had an FOMC statement, essentially in the lead up to that. However, what we might see is then selling pressure come back in later on in the week, then causing a bear flag, a breakdown in price, and then coming back towards the lower end of the channel. So the channels that we're looking at this week is 1,270 up to approximately 1,293 to 95. That's the range that we're looking at. So within that normal approximately 200-point range. The way I would look to take advantage of this is, at the moment, my bias is bullish. So the beginning of the week here, from Tuesday through to Wednesday, I'm looking at the potential for a bit more upside on gold, rallying approximately another 50 to 100 points if we can break above last Friday's highs, which is 1,288. If we break above that level, that's where we could see some follow through up to approximately 1295. Watch out again for that dollar strength coming back into the market at the end of the week. Remember, we've seen 87% of the time so far in 2019, the dollar has risen on a Thursday. Last week especially, the dollar broke out on Thursday to 2-year highs. So you really want to be on the right side of the dollar. And also note that the dollar tends to be at its strongest at the end of the month and the first week of the month. So what we have on Friday is non-farm payrolls. You want to watch out for the volatility that brings as well. Now this week is a bit unusual too, being that it is a holiday for China this week and also Japan as well, and we have Labor Day where we've got a lot of Europe off. So with that, we could see exaggerated moves. So you want to position yourself correctly for that, the potential for some big moves, not only on gold, actually oil. We've actually established a long just yesterday as well on Brent crude oil, trading for the potential for a breakout and a retracement after we saw oil break out to the highest level in 5 months just last week. And then of course we saw a drop in oil prices after Donald Trump had spoken to OPEC and urged them to continue to essentially produce more oil. So we've seen that have an effect on the oil market, where Donald Trump has expressed his unhappiness with oil prices being that high, and as a result we saw oil, the overall sentiment towards the end of last week, we did continue to see that drop lower for oil prices. So in summary there, what I would look out for is the potential for gold to rally here in the lead up to the FOMC statement. I'm looking at oil here as well, just to clarify with oil exactly what I mean there. So essentially at the end of last week, we saw oil break out to the highest levels in 5 months. Oil is up 40% so far in 2019. So we've seen so far this year as well, essentially OPEC have reduced their output, and that has been in an effort to increase oil prices. So Donald Trump has expressed a need for OPEC to continue to then rise their output, therefore causing prices of oil to potentially go down. But Saudi Arabia are not going to do this. Have confirmed that just today on Tuesday. We've actually seen oil rally over 90 points in our direction just this morning. So I would keep an eye on both gold and oil prices for this week. The expectation is the dollar strength may then come back in around the non-farm payrolls or Thursday, and that's where we're looking to then reposition. So we'd be looking to potentially look for weakness in gold at the end of the week, dollar strength to come back into the market, and then we would look to then set up for May. And as we know, the saying in May, sell in May and go away with respect to the commodity market. So usually the month of May, it's not such a strong month for gold, for silver. It can be well supported for the oil market, but not so much gold and silver. So overall, as we go into next week, be aware, hedge funds and money managers, they've increased their net longs in oil, they've reduced their net longs in gold. In fact, they've now turned net sell short in gold, and you really want to be on the right side of these moves in such a big news-driven week. So I hope that helps you with your trades, and we'll definitely catch you back here next week. So I wish you good trading, and of course, we'll see you back here next week for Gold Asset of the Day.